Donald Trump versus the Fed. So, in the couple of weeks that has been happening, in the few last weeks, there has been a standoff between the Fed head, the Fed of the head, Jeremy Pallone, or whatever his name is, I'm not sure how to pronounce it, guys, and versus Donald Trump. The head of the Fed said that he won't be rescuing the stock market, and that there won't be rate cuts anytime soon. And in response, the White House almost threatened to fire him, which actually on this news, on this threat, the stock market went down a little bit, and so the White House basically pulled back this threat. Now, before we start, let me just introduce myself. My name is Joe, and I talk about geopolitics and macroeconomics. Also, make sure to smash that like button, make sure to smash that subscribe button, so that the algorithm knows you love this video. Also, we have to first start by saying that I have already made a video in the last few weeks, basically prior to all of this happening, about the Fed and about the fact that they won't be cutting interest rates anytime soon. So you can also check out that video, but the news have been moving quite fast and a little bit chaotically, so there needs to be an update. We have to first understand that what is really the stock market. The stock market is the reflection of hope, or lack thereof. The stock market is hope, optimism. It reflects optimism or pessimism in a case of economic slowdown. It's the reflection of hope in society. It's the reflection of hopefulness and optimism or lack thereof amongst the wealthiest people in the country, amongst investors. And we have to understand that hope and pessimism or optimism, all of these buzzwords are basically forward-looking. That's the most important key to remember. The stock market is always forward-looking. You are basically trading PE ratio, which is what the company is able to earn each year, times what the investors are willing to pay for the company. And this nicely basically summarizes this relationship of the stock market with the emotion that the investors feel about the future. That's why I usually call the stock market the reflection of hope. Now, we have to understand that when there is an economic slowdown, like for example a recession, often the stock market is basically acting first. Often the stock market is falling down first, and then we get the final results, the final data. But the stock market is slightly ahead. It's tiny bit ahead. Basically, in the 2008, while the basically official statement was that we have entered a recession, the stock market was already bottoming. It was down 50%, but obviously it was bottoming. So you have to understand that the stock market is always forward-looking. It's always faster than the admission from the government, basically. When Jeremy Pallone says the following, when he says that he's not going to rescue the stock market, he's basically just saying the obvious. He's suggesting that the stock market will fall down first, and after that there is always rate cuts. There are always quite a huge rate cuts like 1% or even 1.5% in order to revitalize the economy, in order to basically bring new life to the economy. But you have to understand, there is a little bit of posturing in his statement, but we have to understand that the stock market is going to go where the stock market is going to go. He doesn't have any influence over the stock market. You have to understand, investors will either buy new stocks or they are not going to buy stocks, and he doesn't have any influence over that. And so he's basically just stating simple facts. He's just adding a little bit of emotions, and he is making it seem like he has more influence over the markets than he really has. But when it comes to the stock market, no one really has any key key switch that can make the stocks go up or make the stocks go down. You know, we have to understand that he has he has quite a big influence over the bond market, over the market with debt, with the United States government debt. But when it comes to stock market, the stock market is just going to go where it's going to go. There is no there is no way to really control what the investors are willing to invest in, you know. And so we have to understand that in a sense, the head of the Fed, the Fed chairman, the main Fed chairman, it's a little bit of a political position, and so you do a little bit of, you know, political statements, a little bit of posturing, but in reality, we have to understand that the stock market is just going to move in the direction that it wants to move, you know. So yeah, there is a little bit of you know, posturing back and forward between the head of the Fed and between Donald Trump and between the White House. But at the end of the day, look, it seems like we are entering economic slowdown, and also the data from Walmart and also the data from FedEx, there has been clear indications. Also the data from the airlines, there is a clear indication that the consumer is weak and that the consumer is spending on unnecessary purchases, and this will basically slow down the economy nevertheless. And this will also have an effect on the stock market, because if investors are not going to see growth in the quarterly revenue, the quarterly profits, they are basically going to flood into safety, and they are going to flood into the bond market. And a little bit of that has been already happening. There have been a little bit of sell-off of the bonds when it comes to countries. I talked about this in the prior video, but there has been a lot of loading up of bonds and treasuries from the private investors, from the hedge funds, but even from the mainstream. And so everybody's basically hedging themselves against the economic slowdown. And that's where we are right now. Everybody's expecting the markets to move downwards, you know. Even the, if I'm not mistaken, even the Bloomberg market analyst team has predicted 35% down on S&P 500, which would be around the 4,000 mark. Now we are around 20% down, and they are expecting another 15 basically from the all-time highs. So yeah, that's where we seem to be heading. There is a very high percentage that, well, everybody is already preparing for that. So yeah, it's quite a wild ride, I'm not gonna lie. I hope I will be able to keep my job, but yeah, it's a wild ride. But anyways, guys, Make sure to smash that like button, make sure to smash that subscribe button, and as always, I will see you in the next one. I will see you in the next one, guys. Bye bye. Bye bye.